All right, let's jump right into it. Macro events around the world relating to Russia and Ukraine are severely disrupting all kinds of markets right now, of course, including cryptocurrency. The BBC just announced today that Russia has officially invaded Ukraine overnight. By the time you're watching this, you've probably already heard about this news. And when big world events happen, markets react. Bitcoin is down right now at the time of this recording, 7.6%. It's actually up slightly. It was down even lower overnight. This is the last 24 hours that we're looking at here. Bitcoin did dip as low as $35,100. And really every major crypto project is down today across the board. It is a sea of red out there. And there's no exception either with the S&P 500. It's actually been upticking a little bit after we saw some very violent futures forecasts kind of last night once the news initially broke. So it is up from opening today, but I mean, it's all about perspective. Take a look at where it sits here over the course of these last 5 days, down over 5%, which is not as violent as we normally see in the crypto markets, but this is pretty severe if you're an S&P 500 investor. This is definitely negative market sentiment. You really can't go more than 30 seconds on crypto Twitter without hearing that Bitcoin is a way to opt out of the conventional financial system. It's been this way for a while. You hear about other cryptos and the crypto market generally as well, but you always hear this point that's made about Bitcoin. And yet a funny thing happened on the way to becoming a non-government based money and economy. The S&P 500 and crypto, but specifically Bitcoin, started to move together. Big events like a potential war have investors around the world treating all risk assets in the same way. That includes stocks. It includes Bitcoin, it includes the rest of cryptocurrency. People are taking profits because they're jittery. Quite honestly, markets are panicking. But could this potential war have the same impact on both stocks and cryptocurrency? Or potentially, will we see crypto finally emerge as the safe haven it was promised to be in times of crisis? Hey guys, my name is Maddie and this is Altcoin Buzz. We are a crypto investment research company and we're striking a bit more of a somber note today. Not because crypto is bleeding the way it is, that's unfortunate, but because there's a lot of heavy news out there. And if you've been across any of it, you know that everybody's still kind of waiting on the edge of their seats to see what comes next. There's a lot of posturing right now, a lot of developments that will affect not only cryptocurrency, not only financial markets, but potentially a lot of other ultimately more important things. So the tone is going to be a little bit different today, but we do want to explore this topic of Bitcoin and crypto as they relate to the S&P 500. Before we get into it though, guys, as a reminder, we've documented many 100x returns across all kinds of projects, really before anyone else ever talked about them. Volatility, as far as we see it, is a positive in this space. Right now, we're seeing a lot of negativity, a lot of downside volatility, but these are the moments that, not financial advice, you ought to be taking advantage of. These are opportunities. And so if you are interested in our detailed process for researching new projects, then you may want to check out our new and improved Altcoin Buzz Access Group. You can find more information about this using the link in our description below. And as you guys already know, we are pontificating here about world events and capital markets, and these are our opinions. But do not misconstrue this with official financial or investment advice. That is not what we offer. Okay, getting right into it here, let's set the stage with a look at what exactly is the S&P 500. And before we can compare that to Bitcoin, we have to know what we're talking about. So specifically, the S&P 500 represents the 500 largest publicly traded companies in the American stock market. So it's an index that Standard & Poor's, S&P, created back in 1923, but it's maintained that listing of 500 corporations since 1957. It's really a proxy for the market as a whole because it has stocks from all kinds of different companies in many different sectors. They don't necessarily have anything in common with each other as far as which sectors they occupy, but the requirement to be on this list is, again, being among the top 500 American companies that are publicly traded. Index investing, of course, is very popular. Likely many of you are involved in that. And this is the index that people buy and that funds use as their benchmark to try to beat. The most passive investments are based on investing in the S&P 500 index, and passive investments control about 54% of the stock market right now. So This is really representative, the S&P that is, it's representative of the market, or at least as a pretty good barometer of where the market stands. We have to talk about risk on and risk off. This is an important investment term used by professional money managers and institutional investors. And it just means that there's a time to be aggressive in the market, which is risk on. So risk on means that you're buying risk assets. And these are assets that could be volatile and could earn you money or lose you money. There's even a trading indicator for it, since many see this as a measure of market sentiment. Risk on kind of sounds like crypto in this sense, and for many professionals, it tends to mean stocks, not so much crypto, but I guess the mentality is very similar. So the S&P 500 would be considered a risk on asset. And as the industry matures, investors actually see crypto as a risk-on asset right now too. Coins like Bitcoin, Ethereum, maybe even Litecoin, after all, have been around long enough and have enough utility that their chances of going to zero are small. Can they lose value? Yes, of course. Just look at the price chart of your favorite crypto over the course of these last 4 weeks. On the other hand, we have risk off. That's where market conditions are choppy, non-trending, maybe too volatile, or the uncertainty is too high. So when you think of war, or at least the potential for war, you can probably guess whether that's risk on or risk off territory. In a risk off scenario, kind of like we were in during late December in the entire market, and that we are once again in now thanks to macro events. So in these risk off scenarios, it means that there's a flight to quality. This is the term that's used in investment circles. So this refers to cash, it refers to gold, it refers to US Treasury bonds for the longer term, US Treasury bills for the relatively shorter term, as these assets are much less volatile and less likely to lose money in uncertain times. These are kind of like the equivalent to a certain extent of stable coins in the real world. So what's happening right now? Gold, as part of the flight to quality, is actually up 3% today. Crypto right now is sort of seen as risk on, with similar investing risks as we'd normally observe in stocks. And this downtrending market that we've been in for these last few months is forcing people to see whether crypto is really different from the stock market as an investment risk or not. And the calculation people use for this is correlation. Correlation between any two assets is a range anywhere from -1 to +1. A negative correlation means that the assets are negatively correlated. In other words, asset A goes up by 1%, then asset B does the opposite. It goes down by 1%. Those would be negatively correlated. A negative correlation is important for portfolio management. It also helps delta neutral trading strategies where the idea is making money regardless of the market's direction. So as you may have guessed, a +1 correlation is positive, and that means that asset A will go up in the same direction while asset B also goes up. That's a positive correlation. And of course, you can have strong positive correlations, you can have weak positive correlations, strong negative, weak negative as well. And a 0 or close to 0 correlation means that the assets are not correlated at all and seem to be completely independent of each other. Many believe stocks and crypto are getting actually more correlated now due to this general risk on, risk off philosophy. The IMF, the International Monetary Fund, has a lot invested in maintaining the status quo financially. Yet they did some good research on whether correlation is tightening between crypto and stocks. This summary of their findings is that as more institutional investors get into crypto, the more they're likely to move money back and forth, and the more likely they're going to be to treat crypto as a similar asset to the other risk assets, such as the S&P 500. I mean, this quote right here says it all. Crypto assets are no longer on the fringe of the financial system. The article also highlights the fact that before the pandemic, the S&P 500 and Bitcoin had very little correlation, if any at all. But then most assets dropped during the second and third quarters of 2020, when much of the world was stuck in quarantine, as you guys all recall. And stocks, as well as Bitcoin, both bounced back for a big 2021. The IMF says the correlation increased heavily during this time to its current 0.36. This means that a 1% move in one asset means a 0.36% move in the same direction, positively, of the other asset. Our own calculation of annual returns confirms this positive 0.36 correlation, as you're going to see in the upcoming table. Even the IMF admits that Our analysts suggest that crypto assets are no longer on the fringe of the financial system. Again, that's a pretty big admission from this particular institution. And the IMF aren't the only ones with this opinion. They're not the only ones that ran these numbers. Blockworks looked into this correlation too, specifically with Bitcoin, and they did so in the context of the January effect. The January effect in the stock market is that returns for January often are a guide to how the year is going to unfold. Positive returns in January usually represent a positive for the rest of the year. And so by extension, the inverse is also true. As of the beginning of this new year in 2022, Blockworks confirmed the same correlation of 0.36 between Bitcoin and the S&P 500. But they also note, which is in this chart from Coinmetrics, that correlation has been getting more positive over the last 2.5 years. In fact, all the way back since 2019. Decrypt is also reporting similar findings. They're saying that in early January, the correlation spiked all the way up to 0.61, which is a much higher correlation than we've seen historically. And then the New York Times, who are definitely politicizing the use of crypto in general, they printed this story yesterday about how Russia does and will continue to use crypto to evade sanctions, even with a Ukraine invasion. Let's take a look at some of our own numbers. We wanted to see for ourselves, so we ran the numbers, and not just on Bitcoin, but on Litecoin and Ethereum as well, because the two have been around for less time than Bitcoin, but they've still been around for a little while. And so we looked at the correlation, the numbers between them and the S&P 500 starting from 2014 and 2016 respectively. Those are the first full years of operation for these cryptos. Here are the correlations that we found. So Bitcoin and S&P, that's 0.36. Litecoin and the S&P, 0.19. Ether and the S&P, that's the lowest at 0.12. What does this all mean? Well, all three cryptos have a slightly positive correlation with the S&P 500 when we looked at the annual returns for each full year that the crypto had been active. But Bitcoin's correlation is the closest to the S&P. Wartime or not, Bitcoin and the S&P 500 are moving more similarly, and the trend seems to be increasingly positive as the years go by. Well, why is that exactly? Probably because Bitcoin has both the institutional investment behind it and the most interest from professional investors, from guys like Michael Saylor and MicroStrategy. As big and important as Ethereum is to the industry, it currently holds little interest from institutions. Companies don't want to hold it on their balance sheets the way some like MicroStrategy hold Bitcoin on theirs. Here's another interesting finding as well. In our calculations, we thought it would be interesting to compare the three cryptos to each other, not just to the S&P 500 as we did above. Here's what we found for correlations. Bitcoin and Litecoin, they're at a 0.23 correlation. Bitcoin and Ethereum, a 0.25 correlation. But check this out, Litecoin and Ethereum, a 0.85 correlation. All of these, of course, in the positive direction. So overall, the three cryptos have a slight correlation with each other, the same way that LTC and Ether have a slight positive correlation with the S&P 500. But the big surprise when looking at the annual returns is that Litecoin and Ethereum have a strong 0.85 correlation. This is based on annual data and does not take into account daily and monthly fluctuations, but still, this was a surprise. It means that if you're a long-term hodler, one could be a good substitute for holding the other if this correlation holds. And it's likely because they're both altcoins, let's face it, but still a pretty notable observation here. All right, so what have we learned? Well, currently Bitcoin is moving closer to acting like the S&P 500 as a risk-on asset for investment pros. Its correlation with the S&P is higher than two of the other long-standing cryptos, Ethereum and Litecoin. And for the last 2 years, this correlation for Bitcoin has been growing, meaning that the two assets move more in tandem than they used to. And a huge macro situation like the invasion of another country just proves how similarly they both react to global events. Even legacy finance groups that would prefer to kill Bitcoin are saying not only can you not kill it, but it's acting more like a conventional risk-on asset every day, and the numbers are starting to show it. Like most of you that are watching, we would still prefer to hold Bitcoin or Ethereum or even Litecoin more than holding the S&P 500, but could one become a reliable predictor of returns for the other? Who knows? possibly, of course, we're going to be watching. Let's hope for the best right now, members of the Altcoin Buzz army, not in terms of the crypto markets, but just in terms of what's unfolding globally. If you're still watching, of course, be sure to like, subscribe, share, hit the bell to receive notifications. Let us know if you're an investor of maybe the S&P 500, if you're into traditional indices, maybe you also invest in precious metals like gold, which we talked about today. Maybe you're exposed to the Dow Jones, maybe you're exposed to the NASDAQ, maybe you dabble in currencies and foreign exchange as well. Maybe you're much more diversified than just a crypto investor. If that's the case, let us know about your experience and let us know about your thoughts pertaining to this correlation that we're seeing grow more and more. Check out these other couple of videos which should be popping up right about now. Stay safe, everybody, and as always, we do hope to see you again soon in our next video. Take care.